Everyone, Jeff McGinnis, Cross Country Mortgage, and it's yet another month. Welcome to November. It's time for the Rate Watch Report. It's time to look at the bond charts. It's time to look at inflation. It's time to look at jobs again. And the bonds, as a reminder, is a good indicator of what has happened over the last month since we talked last about the fluctuations in rates. So we'll take a look at the bond charts, which I'll explain or re-explain how those work. And then I will go into inflation, one inflation chart, and talk about that a little bit. And then we'll talk about jobs and why that's important and what the Fed is looking for so that they can feel comfortable that we're heading in the right direction for the economy to either not crater or go blazing into inflationary concerns. So let's take a look at the bond chart. All right, team. So here we are. Here are the bond charts for well, it's longer than a month, but let's take a look at it real quick. What we're seeing is the mortgage-backed securities market, and this basically will control or influence 30-year fixed-rate mortgages as this trades. So like a stock, it will affect the rates for a 30-year fixed-rate mortgage. If it goes down or if it goes red, then that's bad for rates. That means the rates will go up. If it's green, that's good. That means that the rates will come down. And if we look at, today is November 2nd, and if we look at October 2nd, you don't see a lot of difference, do you? We kind of started on the same note that we ended on, at least for the rate watch. And you can see right here, the ceiling of resistance, right? It is just really clear that the bond market's having a tough time breaking through this highlighted level. But at the same time, we have this happening down here. That basically saved us from going from interest rates getting higher. And now we have this little interim, like a floor of support. So you want to think of this is one level of support, and maybe this is the next level of support. So this is like your first level on your house, and then this is the basement. So we did spend a bunch of time in the basement here during the month, and then the first part of the month was spent on the upper level, and then within 2 days of trading, we popped out. Now, this is one day ahead of the jobs report. Now, I will talk about jobs in a second, and we can talk about the rearview mirror a little bit. But looking forward, it has not yet been in the books. So we'll see what happens tomorrow. But either way, let's take a look at the charts for inflation. Okay. So now we're taking a look at what's going on with the Core PCE, or one of the indicators of inflation that the Fed really likes to use. And you can see this, that at least in the months that we have here, this is what, July, August, September. I guess we haven't recorded October yet, but which would make sense. It's always in a rearview mirror. But we can see that the trend is heading downwards, which was why I would assert that the Fed is pausing out on any other, currently on any additional rate hikes. But this is a really important thing to pay attention to. So if you hear things like, hey, inflation is on the rise, just double check the stats, maybe do a quick Google search, look for inflation charts that are actually recorded, like this one, perhaps, some of the other indicators. There's a bunch of them out there. But when you're out in the market, or when you're out listening to news, and the job of the news is really to get your eyeballs and your emotions embedded into what they're saying. So they may have some amount of truth but spun in a way that makes you feel a certain way. So when you hear inflation is on the rise, maybe just do a quick Google search, check some charts, and make sure that it's actually on the rise, or it is actually what the press is saying. So those types of things are super helpful. On to jobs. Okay, so here's our unemployment rate for the last few months. We're not hoping people lose their jobs. What we're hoping for is a right-sized level of jobs that will keep the economy sustainable and out of inflationary mode without it creating problems for, a prolonged recessionary situation. And we can see over the last two, so September and August, the unemployment rate has been kind of flat. So it really hasn't hit the marketplace, or a lot of people are still, we're at about the same number of employees as we were in August and September. Now, looking through the windshield, what I'm hearing are a lot of things like companies are looking to change the way that people get compensated, or their job descriptions, or what their, KPIs are, so that perhaps they could remove that employee without having to lay them off. I'm not confirming that with any specific company, but I've heard these things happening. Now, take that with a grain of salt. I don't know if that's happening with your company or clients' companies or anything like that, but it is a tactic that has been brought back to an awareness, or at least my awareness, that has been used in the past. So that hasn't hit the marketplace yet, or hasn't hit the statistics yet. So there may be a lag behind what's happening in the employment market. And we just need to be aware of that particular chart, because that's what the Fed is going to be basing their Fed hikes or Fed reductions on moving forward. So I hope this has been helpful and educational. And if quite honestly, even in that blip of higher interest rates, people were still buying houses. I want you guys to know that people were very interested in buying houses. We are using what's called a 2-1 buy down, or helping people manage their cash flows in this environment. And for those of you that think interest rates are really high but would like to buy a home, come and talk with me about it, because there might be a strategy or solution that could help you out with shaving off 1 to 2 points off of an interest rate for a temporary period of time, to help while we work through these inflationary concerns with these job reports. And the experts that really study this a lot more than I do are telling me that we're going to see lower interest rates in the coming months. So you can buy your home at today's market price. You can always refinance down the road to a lower interest rate. We actually offer, for anybody that's doing loans with us now, we will actually refinance them at no lender costs. And so that's a great feature as well. Additionally, maybe it could be a great time for you, or it might not be, but either way, I'm here to help. I'm here to help guide and make sure that you're making great decisions for yourself. All right, have a great one, and I'll talk with you soon.